Welcome, everyone. Welcome to this week's episode of the Tom Matt Show. Thank you, Sandy, for bringing us in, top of the show. So very, very grateful to everyone who pays attention, listens, criticizes, agrees, whatever you want. You know, we're out here just trying to give you some a little bit of education, a little bit of entertainment. That's what we do here at the Tom Matt Show. Last week, I had a little fitness show on. That was a good one with Mike Draheim, buddy of mine from Wisconsin, owns a sweet gym, which is a very high-end, unique boutique gym and I called the show XLR8, XLR8. And the reason I'm telling you the letters for this, because I want you to look this place up, everybody, because these new niche, as I said, kind of boutique gyms are really becoming the new norm. And this especially for kids with all of this advanced training that's coming. And now with all this college stuff going on, everybody's starting to pile into that whole area. So look at that one, listen to that one, because Mike Draheim has been he's a track guy, but his expertise is in training people how to become faster. But it's just talking about kids and how we all need to kind of help each other get better with this and understand the cost of all this. All right, today, my brother from another mother's back. Been a minute. He'll be back. He's gonna be in and out. He's a worldly kind of guy. Who am I talking about? This world been on the show. This 31st episode.
Wow.
Number 2 of all of the people of this show in the history of the show. In our 15th season now. Craig Stiles. Don't call me Craig. Craig Stiles is here with all the family and all that good stuff going on. I'm going to call this one 4 Factors in Financial Fitness, because if Craig's here, it's an Ameriprise time. We're going to talk about money. We're going to talk about how good our money's doing. Ooh,
yes.
Doing pretty well too. I just looked at it the other day and I was pretty happy with that. So I was like, nice time having Craig on so I can say, Craig, nice job on that money thing you got going for us. Calling this one the 4 factors, and those 4 factors are discipline, purpose, strategy, and fear. That's the 4 factors for today. I want to welcome back to the radio program my brother from another mother, our financial fitness guru, and our guy. No question about it. He got all of our retirement zone savings, Mr. Craig Ameriprise Stiles. How you doing, Craig?
I'm doing well, Tom. How are you doing?
A little bit longer warm up because I hadn't seen you in a minute, and we just, ever since Michaela's wedding, it's just been craziness. It's just
it has been. I'm
catch
glad you're able
everybody
to
up
make it. It was awesome.
That was such a beautiful. Well, let's talk about that. Let's just talk about the family. You know how we do this. We've done this a few times. You're kind of a veteran, but I share all of that. That was such a wonderful event. Thank you for inviting us to that. But talk about the whole family thing and going on with Michaela and the whole group.
I think I'll start with the bottom and work up, because we always stop from the top and work down. And Michaela's always ends up taking up 50 minutes of it. But
right.
JoJo, the 4-year-old, she was beautiful in the wedding as well. And many of you may have recalled we had Michaela got married towards the end of June, and presently down in Florida, working down there, and her husband is in med school, and so everybody participated in the wedding, putting it all together. It was just a fun event. My son Peyton had his graduation party a couple weeks prior. And then we had First Communion, we had confirmations. We had a lot of activities going on throughout the summer. It's kept us pretty busy, to say the least. But yeah, the twins are doing well. They're each 11 years old.
Wow.
Peyton, now that he's graduated, is he's working. My son Zachariah is also involved. He's ended up pulling an engine out of a truck, trying to figure out a way to put a new engine in the new truck. My son Peyton he has an older Subaru, but ended up putting a new motor in that and got that running this last week. And so it's been kind of fun just to see what everybody's doing and how they're branching off in all these different areas. And yeah, I could talk, we could spend a whole show talking about what's going on with the kids and the family and everything. So
we like doing that, but don't forget talking about Stephanie. I mean, she's the glue, the glue to the whole deal. Talk about her.
Oh, well, she was very instrumental in kind of organizing the whole party. It was kind of, from the wedding standpoint, it was cute, I would say, because the caterer, when they came out the day or two before to kind of work out plans, my wife got the book out. Here's her book of how the flow was, how people are going to walk, where the thing. So she had everything graphed out, what the flow of the people was going to look like, what the layout of the whole front yard was going to look like. And they just kind of stopped her for a second and said, do you do this for a living? Or can we hire you? It was one of those situations. She goes, no,
Hilarious.
and I don't want to do this again. But it made their jobs a lot easier. And then understanding all of that, that's what made that event so much more fun because everybody knew what they're going to do, how it was laid out, how it was. So it just made it for a great time. So yeah, Stephanie has been very instrumental in. She is the glue
She's
that
the
keeps
glue.
us all together. There's no
She's
ifs,
the
ands, or
glue.
buts about
Sandy's my anchor. Stephanie's your glue. All right. So
it. So now we get glued to the anchors and we can't go anywhere.
hey, whatever it takes, man. I'm good with it. You gotta talk about real quick about the that I don't know if it's a ceremony or the thing with cutting the log. Okay. So
Oh,
set the whole log, set the whole, listen, everybody, you got to pay attention to this. Okay. Real quick. Cause I'd never seen anything like this at a wedding. This was the coolest thing ever. And I tell you what, it was a struggle, but go ahead. Craig's already starting to sweat thinking about it. Go ahead. Tell him the
well, I
story.
was because I didn't think it was going to work there for a minute, right? So it was more of it's kind of a German tradition, as I understand, because my wife is half German, my mother-in-law is German, and it basically is a log that you have put together, and it's a two-person saw, one of those like older fashioned saws where you got to work together. So before a new husband and wife can go into the reception, they have to work together and show how they work together to cut through the saw. So it was rather humorous because I, the night before, myself and one of the other guys, we put the log down and like, okay, we want to make it somewhat quasi simple. So he and I each grab it with one arm and we just slowly let the saw do its work to cut through it. So we're just slowly pulling it. So I would just pull, he would pull. Not a problem. Like I'm doing it with one arm, he's doing it with one arm. Wasn't a problem. But then I see Sam and Michaela get in it. They're pulling down, they're yanking, it's sticking, it's pushing through here, they're pushing through. Oh my goodness. It was rather comical. Now, that's the primary purpose was for them to learn to work together, communicate. So this way, figure out how the saw works because you get it working right, you can cut very smoothly through that log. And it was really interesting to see how the other family members kind of get involved as to how our other family members going to help them out through difficult times and how they react. And it was kind of a cute thing to observe as we're getting
Hot, sweaty,
hot. Right.
sweating in their,
I was sweating more because here
tuxedos.
we got 300, 400 people watching what's going on. And I'm like, oh my gosh, is this not going to work? Because the one part, Sam broke the saw. He popped the handle off. I'm like, oh no, is this going to be a sign of something? So I'm like, oh wait, no, just let's screw that back on. And then he got it working fine. But it was, yeah, it was a fun traditional piece to be a part of for sure.
Okay, so let me add a little flavor to this thing. So I get over there early because I want to take some pictures and stuff there, and I'm looking at this, and we're talking probably I'm probably going to exaggerate here, but I'm going to say a 4 foot log, maybe diameter, maybe
Yep.
three. It was quite substantial,
Yep.
and so it's on like these sawhorses, everybody. So it's set up on these two sawhorses kind of thing, like holding the log in place. So it should go pretty well. And he already had it all set up. So it looked like a piece of cake. I mean, you go in there, boom, 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 boom. Except when you're not used to working together, this is such a perfect thing for weddings. I
Or
mean,
working with a saw or learning how that saw works. I mean, it was just one of those hand saws that if you just rock it back and forth, it just slowly
if
cuts through.
if
It doesn't
if,
natural.
if Stephanie would have put that in the book that we need to practice this before, then maybe it would have went a little better. But see, that's the whole point of showing people how hard it is to work together, but how good it is when you can accomplish the good things. All right, I'm going to carry this through, Craig, because we're going to come to
Yep.
break here in just a second.
Yep.
Craig's here. Craig. Financial fitness, you know that. Ameriprise. 4 factors in financial fitness. Now, this isn't just the any four, but these are four that Craig came up with, and Craig is our guy. And as you know, he advises us on all of our financial matters. Many people in this area rely on Craig Stiles because he's Craig Stiles. And so discipline, purpose, strategy, and fear. You're listening to the Tom Matt Show. Welcome back, everybody. Welcome back. Segment 2, the Tom Matt Show. Thank you so much for joining us this week. However, you're picking us up on the radio, all over the world on the internet. We do that thing. We have this thing called YouTube that we work with. And so we go all over the place and do this radio program. Now we're in our 15th season. We would not be in our 15th season without the couple of people well, my guest that I have today, Craig Stiles for sure, has been a sponsor for a long time with us. And then we got
Couple
Brock
years.
Lecter at the selling team of Keller Williams Realty. And the whole thing with my sponsors, my people, my guys, it's trust. We utilize your services. We utilize their services. We have utilized their services. And I can tell you just point blank that it's not like I'm going to pitch a quarter pounder or something like that because I don't eat quarter pounders. But I use Craig Stiles and I use the selling team of Keller Williams Realty a couple of times. And it worked out really well because of the trust factor. 517-853-6408. That's the office number to the selling team. And if you didn't see those last 2 episodes we did back to back, you guys, for the buyer's agent and the seller's agent thing, make sure you go check those two out because those were really interesting. We did them back to back, one week and the next week, and we had Mikey there and we had Stacy, and we did the buyer and the seller thing, and I learned a ton about this whole how they split that up, and as like Craig has taught us before with financial stuff, just like with real estate, the fiduciary aspect of agents when they're working for you in real estate, money, whatever, you need to have these people that you can trust. The fiduciary, they're there to help you. 517, this is Brock's cell phone number. 517-303-3262, 517-303-3262. Go to kwsellingteam.com, sell your home without hassles like we did, buy a little house or any house like we did without hassles. Get a hold of Mike Dedman. He's your buyer's agent. Get a hold of Stacy. She's your seller's agent. Or Brock. Brock was our seller's agent for a big household. And away we go. I mean, it just worked out really well. Craig's here. That means Financial Fitness 31st visit to the radio program. And thank Craig for being with us. We would not be in our 15th season without Craig Stiles. There's just absolutely no way. So we're calling this one 4 Factors in Financial Fitness: discipline, purpose, strategy, and fear. And I was just mentioning to Craig during our break about our portfolio and how well it's been performing. And he started to go into some factors that he had, he's like a mad scientist when you start talking to him and stuff. He breaks out the laboratory book and he gets the lab open, gets his lab coat going. And I mean, he's going to town. And I said, Craig, slow down. Let's save it for the show. So tell the story that you're about ready to tell the story a second ago.
Well, I'm just highlighting, like when we're kind of touching on the points, discipline, purpose, strategy, and fear as it relates to what drives the different markets. What I was highlighting is that like one growth strategy that we've utilized basically became extremely defensive after the first quarter, when we had the huge dip that went into the markets, and they never really got back in the technology, but they maintained that. And so the question that I always will have with clients in some respects, do we go ahead and make any adjustments or changes out of that particular strategy, understanding their history, how they performed in down markets, even though they're considered a growth and they're underperforming year to date, does that mean we need to make any adjustments or changes? And that typically is where the conversation leads into, do we stick with the discipline? Do we make any adjustments? What was the purpose for it to begin with? And then evaluating the strategy relative to its peers. And are we making the adjustment out of fear? So highlighting those 4 bullet points kind of relates into one particular strategy that we've implemented for the main purpose that has done very well in downside protection as a growth strategy in difficult markets. And when we had the Liberation Day back in April, when the markets were just going to heck in a handbasket, this particular growth strategy was, doing extremely well in the first quarter, but then really kind of pulled out and then never got back into some of these growth companies, but went extremely defensive, and they had specific purposes for doing that. Not knowing what the tariffs were going to be impacting, but the mere fact that they stick with their discipline and haven't been making any major adjustments within the portfolio, that kind of leads me to believe, okay, we want to stick with this discipline, because if we have a 3 to 5 year time period, the likelihood that they're underperforming now gives me greater confidence that they're going to outperform in the future years to come, especially when we're looking at over such a short time period. So that is kind of one of the, I think, important components of the 4 bullet points that we're kind of addressing today.
Okay, let me reset that thing because Craig just gave us a really good explanation on what Craig was just referring to was our portfolio, Sandy and I. Okay, so he's just using it as a perfect example because during our break, we were talking about, and I said, hey, the portfolio, I don't look at it that often. I mean, that's what Craig's job is. Craig and his whole team take care of this stuff, and Ameriprise handles this. But I looked at it, and it looked perfect. I mean, it's gone up like it always has been, and the strategy is still there. So it's like, so I just want to reiterate for you guys out there that Craig was referring to Sandy and I because, as I said, for my friends and our sponsors that come on the show, I want you to know we utilize their services. I mean, 100%, no question about it. So the discipline for us is, I wrote down some notes here, bud, but it's like from listening to you and all of these four factors fit together, but discipline goes into your end of the thing, the broker, the business side of things, the person or company that we're buying into, us as consumers. There's a lot of discipline that goes into all of these factors, right? And that's why, like, having Desideri helping you, Desideri Analytics, which we should talk about in a second, make those suggestions using the technology like AI. Like, you use AI all the time. How is that working for you? And thank you for doing that for us with the discipline.
Well, the comparison, for example, we're using three specific strategies in your portfolio. So the one being more growth oriented, and the other is actually the reason why your portfolio has been able to maintain and continue to grow as you see it throughout the year, because the other one's doing extremely well. It's a great complement to one another based on the purpose that we have for each of the accounts, and that's what we've been driving as a part of that. And what I was just kind of highlighting was when we have those meetings and talk about the strategies individually, are they still meeting their purpose? Is the strategy still fitting into it? Are we making adjustments out of fear? All of that kind of impact, if you will. So that's where the maintaining and sticking with the discipline kind of plays in. So, I mean, all in all, when I sit there and look at the portfolios and utilize Desideri to kind of bring it up, the strategies meet those needs. I mean, they still float to the top. They still rank pretty well relative to its peers when the most recent data comes out for me to hit that kind of defensive profile that I will put onto a strategy. They still float to the top when all of those other factors are brought into fruition. So from that perspective, I'm not suggesting making any changes right now.
No. And I'm just looking, I'm making notes.
Kind of sounds like a portfolio review now, doesn't it?
You know what? We did a whole show on that. Again, getting back to the financial fit, I'm going to carry this thing through, Craig, because we're going to go to break. But in the financial fitness area of our website, TomMattShow.com, there is a specific show on many of these topics, the fiduciary thing, the review, because we did a whole show on the review. It's like, why do I need to do this? I trust what we're doing. I don't want to do this. I don't really want. And Craig was like, no, we got to do this. It's an annual thing. We got to do this. And after we hit the meeting, it was like, why in the heck didn't I want to do this? This is like very informative, very educational. And Craig just, he needs to touch base with us so that we know what he's doing and we approve of what he's doing, which we do, obviously. And you just take it from there. So again, resetting the whole show today, 4 factors in financial fitness. Craig just gave us a quick snapshot on the discipline side of things and sort of talked about Sandy and I's portfolio and how it's doing. Because again, I want you guys to understand, we utilize our services with our guys. And it's like, I want you to reach out to them. We'll get Craig's numbers out here in a second. You can get all those here. Again, resetting 4 factors in financial fitness: discipline, purpose, strategy, fear. 31st visit to the radio program. Mr. Craig Stiles from Ameriprise Financial. This is the Tom Matt Show. Welcome back. Welcome back, everybody. Thank you so much for joining us this week. This is the Tom Matt Show. I am your host, Tom Matt. 4 factors in financial fitness. So that must be obviously a financial fitness episode. Those 4 factors that we're discussing today: discipline, purpose, strategy, and fear. And they actually all lead into each other. And Craig Stiles is our subject matter expert when it comes to this, of course, has been for many years now. And we're going through this, like discipline. You want companies that show the discipline. You want the brokers that have the discipline. You want the businesses that have the discipline, and you want yourself to have the discipline. Before we go much farther, though, I got to tell you, I got to do another quick testimonial for Brock, and the whole selling team of Keller Williams. This is a quick one. This is from Jeff and Tammy in DeWitt, Michigan. Nice area. Real nice. Brock Fletcher and the selling team have been, and this is in bold type, absolutely stellar. Absolutely stellar. You have our business for life. If that isn't a great testimonial for my friends over there, I don't know what is. that's just the way they roll. And it's just greatness. And I'm going to give you the phone numbers again. 517-853-6408. 517-853-6408. Office number. Brock's cell phone number, and this is the one you text him, leave him a voicemail. He will get back to you, I promise you. 517-303-3262. Go online to kwsellingteam.com. Go to our website, tommattshow.com. You can click on the bottom of down there at the bottom of the page. You can get Craig there. You can get Brock there. You can just go for it and do whatever you want to do with that bad boy. But sell your home without hassles and go to the people that invest money in their marketing so that they can do the best business for you. That's how they roll. Okay. And lastly, I want to say thank you and so much to Joan Wright of Williamston for being a fan of the show. I've been reading your name on Brock's Reads here last couple of months because Brock told me that really nice story about how much you enjoy the show on WKAR on Sundays at 5. And I appreciate you very much. And please keep listening to the show again. The show is carried on broadcast radio, WKAR at Michigan State University, 5 o'clock. All right. Craig's here. 4 factors in financial fitness: discipline, purpose, strategy, and fear. Talking about the discipline. These all fit together here. And Craig, for the new listeners out there, you talked just for a brief second about your tool, the Decideri tool that you created. And we have done full shows on this whole thing, but do a quick snapshot on why Decideri fits these 4 purposes so well. And what is Decideri and how proud of you of creating that?
Well, it's basically a process that I built a while back to kind of explain why I make the recommendations that I do. If I sit down and kind of analyze investment disciplines, we're given all sorts of data. When a person looks at their 401k, the only information they're typically getting is the performance of the fund, with a disclaimer at the bottom that says past performance can't guarantee future results and all of this. Well, then does that mean you go and look at the one that had the worst performance with the expectation that they're going to rebound and do better performance? So everything has always been very performance based. And so when we're always talking about customized and building custom portfolios, firms tend to build firm traded models. And then they'll say, you fit this particular score, answer this particular questionnaire. Next thing you know, you take in this questionnaire and they say, well, you're a moderate investor. Therefore, you're going to fit into this particular box. Where when I look at, well, what's going on in the world, then what does that mean as it relates to what I'm recommending to a client, and how does that tie into what the client's goals are and their needs are going to be going forward? So there's a very large overview that I try to take into consideration when talking with prospective clients and even existing clients about what is it that they are truly looking for and need their money to do for them, and then what product is best for them to go from this point forward into retirement or building their net worth over time. So in order to be able to convey that story, a lot of education comes into play, right? I can go on and talk about alpha, beta, up market captures, down market captures, Certina ratios, 1, 3, 5, 7, 10 year to date since inception. And right now I'm losing a lot of your listeners because everything's kind of going over the head. Like, Craig, I really don't care. I just want to know if I give you $1 million, am I going to be able to pull out, $100,000 a year or $50,000 a year? And that's all I care about. And so I have to comply with what their needs are and balance that with what they want to do in many respects. Sometimes if a client says, hey, Craig, I want $1 million, I want to pull out $500,000 a year, that's probably not going to happen. Right? Because that's 50% of your portfolio. That means I have to grow your portfolio 50% every year, and the likelihood of that happening is probably not in my favor. So Decideri allows me to highlight what criteria are used to measure risk and then apply that criteria to sort and rank a massive amount of data that floats to the top appropriate strategies. So when people are building out their pie charts, a large cap growth, large cap value, small to mid cap growth and values, whatever the strategy might be, I can then apply those profiles for any piece of the pie chart to try to get an optimal return that the client's goals are going to be met, yet their risk tolerance and performance is going to be, hopefully, the objective is outperformance. Meaning if they have a certain level of volatility, then my objective is to reduce that volatility given the same performance. Or if I can give them the same level of volatility in their portfolios and increase their performance, then that strategy may be best. Then, of course, there's that holy grail of reducing volatility in their portfolio and getting the outperformance over time. So those are the three areas. Now, the question is, well, how do you achieve that? And that's by building out the profiles and finding the most appropriate strategy. So when I do weights, when I weight the different criteria that are important to me, most people would look at returns or performance being the most important. I have that as maybe being like a 5% weight. The other 95% weight focuses on when a company's buying a stock, when they're selling it, how long they're holding it, what they're specifically doing, for all those stats that are created from those two functions, growth versus value, or growth of a stock, or the buying of the stock and the selling of the stock, over those two things that happen within the market, because that's it. So Decidery just allows me to sift through that massive amount of data where I can actually research roughly 80,000 different investment products and hone down on a particular one that would be most appropriate for the client.
So this is a custom tool that Craig created a long time ago when AI was in the dream phases of people thinking about artificial intelligence.
Yep.
And so this is a tool that he has perfected and is utilizing, and it works for us. All right, so let's continue on with our points here, because Decidery, as you were just describing, helps us with the discipline. How do you help people determine their purpose? And we got about a minute to go here, and then we'll come back and finish that thread. But when you first sit down with a client, Craig, how do you go about the interview process and understanding the purpose of, what are people trying to achieve? How long does it take you to get to that point?
We'll get to it rather quickly, because I sit down and take a look at how their accounts are presently structured. And the question is, all right, how much do you need in retirement? And then we start looking at what their cash flow needs are. That's usually the biggest part to decide what that purpose is. And depending on how much money they have in retirement assets, qualified funds, or those in non-qualified funds, will dictate from which accounts they pull their income from. And then a certain percentage and how we invest is going to be a part of that as well. So the purpose is going to be dependent on what their cash flow needs are, and where they're currently invested, whether it's IRAs, non-qualified accounts, or qualified accounts versus that of non-qualified accounts versus that of what they may have invested in real estate, or if they're business owners, how much they have invested in their own businesses themselves.
So when we come back, we'll talk more about this, because that is the key to everything, everybody. In life, if we don't have a sense of purpose, this is one of my four pillars. Purpose is my first pillar of my four pillars. And I've done speaking engagements on this stuff. Purpose, passion. Let me think if I can remember. Purpose, passion. I'll think of it. I'll tell you guys when we come back. I think of it. And I'm trying to finish this segment here, but it's purpose, passion. I'm drawing a blank, but I'll think about it when I come back. Craig's here. 4 factors in financial fitness. This is what happens when you start getting a little bit older.
Yeah, well, purpose, passion, pressure. I put a lot of pressure on you.
Doing live radio? We'll get to it. Just be honest. We're just people. This is the Tom Matt Show.
All right.
Welcome back to the 5th segment of the Tom Matt Show. Special segment because only a few radio stations pick this up, WKR being one of them. Let's say hi to Joan Wright, because I know she's listening to the show on WKAR, and all her friends are saying, Joan, you're a star on the Tom Matt Show. Yes, she is. She's a regular listener, and I appreciate that. And if I got other regular listeners out there and you want me to do a mention for you, you send me a note, tommattshow.com. You tell me I'm a regular listener to your show, and I'll make sure that I say your name for you. How's that sound? Is that a fair deal? Craig's here. 4 factors in financial fitness: discipline, purpose, strategy, and fear. We're getting into strategy, and we're going to talk about fear here in a second. But before, I want you guys to get a hold of Craig. Craig, 517-483-4893. But I'm going to let Craig share all his email again and his phone numbers again and his home address and all that good stuff. Go ahead, Craig.
I don't know about my home address, but we'll go from there.
I can give it to you.
Everybody was showing. I mean, it's not like we can't handle 400 people there.
We didn't get invited to the wedding.
Exactly.
I heard it was a good time.
It was a great time. So yeah, my email address, Craig, Craig, .stiles, Stiles, at ampf.com. Adam, Michael, Paul, Frank.com. So that would be a good email address. And of course, you could always Google my name. All my information is going to be there, as well as my location where my office is here. So
Craig Stiles received his Bachelor of Science in Industrial Engineering from Arizona State University. I usually do this to be top of the show. I'm going to do it at the back of the show. Went on to receive his MBA in Business Administration, which is an MBA, concentration in finance, Western Michigan, go Broncos. Intermingled in college. He went into the Army. He served in the Army Reserves, and he was in the first NATO operation in Bosnia in 1996. I like to say this about Craig. He was an industrial engineer at Parker Hannifin Corporation for a while, and then he started his career at another firm and moved on to an even better firm with Ameriprise. And away we go. 11 kids later, all doing great. The kids married up. Pretty soon we'll be having grandkids. It'll be a great thing. All right. I'm sure they're excited to hear that. All right.
Oh, yes.
Discipline, purpose, strategy, and fear in the 4 factors in financial fitness, everybody. Okay, so we've talked about this. If you missed any of the show, please, you can go back at the podcast. Discipline, purpose. We just started talking about strategy a little bit, and strategy is right there. Because if Craig has done all his homework and he's got the relationship established and he knows he's getting to know you, Craig, now you got a little something to go with, right? I mean, you can't develop anything without getting to know the people, as we talked about. But continue the thought on strategy, because I think that having fear comes from lack of planning in my world. Okay. In my world, when things go wrong, it's typically because I didn't plan well enough, and I'm going to own it myself. I screwed something up, or I was procrastinating or something. That's where the fear is going to come in. So if you have an adequate strategy, it should eliminate some of the fear. It's not going to take it all away.
Well, even during that strategy selection process, there's a lot of education that goes on, right? Basically, discipline and purpose that kind of tie into it. In many cases, you can actually have the purpose coming forward, right? When the discipline, find out what the purpose is, the discipline can be applied into multiple factors within a relationship. The strategy component, that also can have a wide variety of factors that get played into it. So as we're going through and selecting the strategy, there's a lot of education that goes into talking with the clients. I've already kind of addressed some of those bullet points, the alphas, the betas, the upmarket capture. All of that data is generated from only 2 things ever happening in the markets. You buy a stock, you sell a stock. You buy a bond, you sell a bond. How low did you buy the stock? How high did you sell the stock? How low did you buy the bond? How high did you buy the bond? What's the interest yield on a bond? What's the dividend yield on a stock? What's your purpose for holding either one of them? Is it to preserve taxes? Is it for growth? Is it for income? Understanding all of those pieces then start to feed into what strategy is going to be best for you going for the next 5, 10, 15, 20 years. That way, now we've got this purpose. We start looking at the strategies. Do we need to make the changes or adjustments? That's where the fear component starts to come in. When the markets start getting very volatile, are you comfortable with the strategy that you're currently in to get you through? Do you have the discipline to maintain it? And the faith, quite frankly, that the purpose is being met for that particular account, especially when markets are not in your favor. Because then that starts to generate fear if you don't have comfort in the strategy that's being implemented. And then you also have another type of fear, the fear of missing out. Have you ever had anybody ask you about Bitcoin? Hey, Tom, have you ever been invested in Bitcoin? I got into it when it was at $40,000 a share. Oh, that was way too expensive. I got out of it when it was 50. I made 20% on it or whatever. Like, that's great. Or 25%. Well, they got out at 50. Do they buy back into it at 100? So gold, right? Buying into gold. I bought gold when it was $1,500 a share or $2,000 a share or $2,500 a share. Understanding the purpose of why you're buying into something and not buying it for the fear of missing out. The purpose of buying some of those different cryptocurrencies or commodities that I shared, if a person were to be marketed like they are that relative for buying a stock, there's rules and regulations for that kind of marketing. I can't go off to somebody and says, you need to buy Apple stock because Apple stock is going to go against inflation, or ExxonMobil stock is going to grow faster than inflation does, or it's going to protect you against inflation. But gold gets sold that way, and people will buy it out of fear. And that's when you start understanding, do they really have a strategy in their portfolios that is meeting a specific purpose? And do they have the discipline to maintain it? Or are they making decisions strictly out of fear?
I think people like to jump on the bandwagon. They see the Tigers are winning. They see the Lions are winning. Now I'm a Lions fan. I'm gonna go spend $300 on gear, and then they lose a game. Everybody's jumping off the ship. I mean, so it's just it's the bandwagon thing. So you see, I heard about the gold thing. Oh, gold 3,000 an ounce.
It still is. I mean,
Okay,
the FC reports right now, there's something they can see it go higher,
okay,
right?
great. You know what I say to that, Craig, and all the people out there? Good for you. Great. I hope that your discipline, your purpose, and your strategy eliminate the fear that you have in your life and that you have a happy life. I am never, ever envious of people. I've
Yeah.
learned I'm too old for this crap anymore, everybody. You got to be, I'm happy for your success. That's why I'm imploring you to at least become educated. But I'm not telling you what to do. I'm
Right.
just saying, hey, this is what we're doing and it's working. And
Yep.
I'm just giving you some good tips here. That's what we do here. So again,
Yep.
the fear of, I don't really have much fear, Craig. I mean, frankly, my fear is eliminated. I can, and I'm honestly saying this, everybody. I don't have much fear with our financial fitness. I've seen what's been happening over the last few years. I have been refired now for almost 3 years, and it's like it's going fine. It's going well. We can still continue to do our retirement zone work and everything because we have Craig, and he's helping us with our 4 factors. All right. Did we cover fear good enough? Do we want to touch that? Because we got about 3 minutes to go before we go to the end of the show here, and I just want to make sure we covered that well enough. Are you good with that?
I think so. I mean,
Okay.
like I said, fear being that last component, there's the dynamic. You don't want to make a decision or change in strategy strictly out of fear. You want to have a justified purpose and a discipline, because you could have a discipline to get you completely out of a stock or a strategy. But if you had a purpose that could also have changed throughout your life, you don't want the markets to be that, the ups and downs of the market to be that only purpose. You want to make sure that the strategy is appropriate for you.
Use my 4 pillars model, everybody. And if you want a copy of this picture, I can send to you too. Just send me an email, tom@show.com. The purpose, passion, faith, and optimism is perfect for what we're talking here with the financial fitness. And this is mine. I developed it for myself, and I encourage people to think about these things. But we have our purpose, we have our passion, we know what we want to be doing. We have faith in Craig. We have faith that things are going to be going good. We have faith in ourselves. We have faith in our beliefs and our love for each other. And then the optimism, absolutely. I mean, you guys know me. I'm Mr. Glass half full. I mean, I don't like being around negative people. You want to be negative? Go ahead and hang out with your negative folk. All right. That'll be fine. I like hanging out with a guy like Craig Stiles, Brock Fletcher. These guys are winners. These guys are winners. All right, Mr. Winner. You got 2 minutes for a takeaway. You got financial fitness, 4 factors. Today was discipline, purpose, strategy, and fear. I'm going to let you finish this thing off here, my man, and we will close this bad boy down. Go right ahead, Craig.
Sounds like a plan. Well, I mean, I think those bullet points, when you're asking about a couple of different things that you wanted to talk about, I think that, especially with the current market environment that we find ourselves in, people tend to lose focus. And when they do that, they lose their discipline, they lose their ability and understanding what the purpose was. They start to question the strategy, and all of that is then driven by the fear that starts to come in as it relates to making those adjustments. So if you're making decisions out of fear, that will disrupt your strategy, that will cloud your purpose, and that will disrupt your discipline. And so, from that perspective, my job is to make sure that clients don't lose their discipline, purpose, and don't make the decisions based out of fear. And then utilizing necessary analytics to help take all of that information, give them confidence in the strategies that they've invested. So, this way, those other 3 pillars are in their appropriate spot. How's that?
There you go. Okay, so I'm going to go back to my 4 pillars here. We're going to close this thing. Purpose. You got to have purpose in your life. Passion. Find out what you like to do and do more of it. Okay, keep it simple. Simplify things. We don't make things too complicated. Go to Craig and get with Desideri and let him do all the work for you. Then it's easy. I mean, simplify. Faith. Believe in the process. Believe in everything that you're doing. Believe in what you're trying to do. If you go about a goal, even if it's a small, tiny goal, and you have a doubt in your head, you need to erase that doubt, because that faith, just like our faith with Craig Stiles and Ameriprise, is so strong, we don't even worry about anything. There is no fear whatsoever with what we're doing. If our show fits your business or group's mission, we want to be of service to you through our guests, like a Craig Style topics or issues. Please let us know. Sponsorships are available. If you miss any portion of the show, podcasts are available at our website, TomMattShow.com. Please check it out. Thanks to my brother from another mother, Craig Stiles, Sandy, Brock, all of you. Remember, before you can share love with others, you must love yourself first. Go see Craig for some financial fitness. He'll get you taken care of. We'll talk to you next weekend, everybody. Have a great week. Go out and ignite your life. Remember, the Tom Matt Show is a production of Boomers Rock Media. We want to bring your story to life. And lastly, Mitch Anderson and Vanessa. We are out. Craig Stiles is the bomb. He's the best. I can't say enough about his financial fitness and everything that he's done for us. And I want you guys to really understand that Ameriprise is taking really good care of us. And I hope that you utilize his services. Craig Stiles. Remember, we got to do this together, everybody. Let's do this together. All right. Until next time, everybody, it's been the Tom Matt Show. I'm Papa Tom. Peace out. Have a great week, everybody. Thank you so much for doing what you do. I appreciate you all very much. We're out.